Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top business stories. Bears take charge on the Lal Street. Sensex and Nifty hit their lowest level in 13 months after a sharp sell-off in late trade. All sectors in the red. Metals worst hit. Rupee closes at a fresh record low for a second day. US Fed Reserve acts against runaway inflation, hikes rates by 75 basis points, the highest rate hike in 28 years. How will this hike affect you? We get you a special report. Get ready for a round of airfare hikes as oil companies raise jet fuel prices to record levels. SpiceJet says the hike is not sustainable. Other airlines also expected to announce increase in fares soon. GST Council to meet in Srinagar on 28th and 29th of June. Huge pressure on the centre to extend GST compensation cess for another 3 to 5 years. Cess is to be withdrawn from next month. Iconic cosmetics brand Revlon files for Chapter 11 bankruptcy in the US, lays down arms against new age online brands. The 90-year-old company says it's currently unable to service debts. Indian equity markets ended their relief rally seen post the Fed rate hike to finish at a 13-month low amid selling across sectors. Sensex and Nifty declined to 52-week lows and extended their losing streak to a fifth day in a row. So far this week, Sensex and Nifty have shed over 5%. Cyclical sectors were the worst hit amid fears of a global slowdown, with the Nifty Metal Index cracking 5%. The Nifty Realty, Auto, Bank and IT indices fell over 2% each. The mid-cap index and Nifty Bank entered a bear market, down more than 20% from record highs hit in 2021. At close, the Sensex was down over 1,000 points at 51,495. The Nifty down over 2% at 15,360. Hindalco, Tata Steel, Coal India, Tata Motors, ONGC, some of the top laggards in trade today. The rupee closing at a fresh record low for a second day, and the 10-year bond yield rising to its highest since 2019. In an effort to quell soaring inflation, the US Fed Reserve increased interest rates by 0.75 percentage points, the highest rate hike in 28 years. The last time the Fed raised rates by 75 basis points was in November 1994. The latest move is part of Fed's rate hiking cycle, and more hikes are expected to bring down retail inflation to the targeted 2% level. Although the Indian inflation rate is better than that of the US Fed, interest rate hike will have implications on the Indian economy. Let's head across to Sakshi Batra to understand what is the kind of impact this will have on both consumers and corporates.
The US Fed has undertaken the highest interest rate hike in 28 years as it has raised the interest rates by 75 basis points. Now, the last time the US Fed had raised these rates by this much was back in November 1994. And what's more is that this may not be it, as the Federal Reserve may continue to raise rates even going forward to bring down prices and to tame the red-hot inflation in the US. But how will this biggest rate hike by the Fed since 1994 really impact consumers like you and me? Well, one, there could be pressure on the Indian rupee. The rate hike could further weaken the domestic currency, which already has been depreciating against the US dollar and now stands at over 78 per dollar mark. Second of all, there could be imported inflation, which could be on the rise, as inflation back home could gather steam through the currency route now. Third of all, stock markets may also continue to feel the heat as the FII outflow may continue. Foreign investors may continue to sell their Indian equity holdings. They have already sold over 1.9 lakh crore rupees of shares in 2022 so far. Next, gold prices may also continue to soar. A rise in the short-term interest rates in the US and the bond yields increase the opportunity cost of holding gold, which yields no interest. So keep that factor in mind when you go out to buy gold. Now, next of all, there could be job cuts. As the Fed tries to tame inflation, rising rates may also spark a period of slower economic growth, which could result in some layoffs or even recession, as is being widely discussed. However, it is still not in a panic stage right now, as the Fed has said that they will be able to tame inflation without causing recession, to calm nerves.
Thanks for that, Sakshi. Bears firmly in control on the Lal Street, as we've been talking about. Sakshi also spoke to Rahul Arora, CEO at Nirmal Bang, on what investors should be doing to avoid the pain in the markets right now.
Rahul, we've seen that the Sensex is down about 4,000 odd points in a week. Now, that's a very sharp fall. What's next? That's the question that all the investors have on their mind. And how much low will the markets go from here?
So on a lighter note, Sakshi, we are students of the market and economics, not of astrology. So it's very hard to predict where it will stop or where it will go. But yeah, it's been a bit unnerving. There's no question. As you rightly pointed out, there's been a huge fall. The Nifty has fallen from almost 18,500 to 15,500 at today's low. Yeah. I think, Sakshi, the point is that a lot of investors came in for the first time into the markets during COVID. Yes. You had record demat accounts, and it was all too easy for them, right? They saw 7,500 Nifty go all the way to 18,500 without a single day of correction, or the odd correction here or there. But it was pretty much a linear move from 7,500 to 18,500. Now, the point is that a lot of these new generation stocks, right, whether you talk about Paytm, Zomato, Policy Bazaar, Car Trade, a lot of these new generation stocks that would be predominantly loss-making and saw a lot of retail participation are not down in percentages. They're down to, a third or fourth or fifth of their values. And the only solace I take, Sakshi, is that you've not seen any significant mutual fund redemptions, and the SIP numbers haven't come off in any material way. I'm a bit worried because you've fallen 3,000 points and there's still not been a reaction. So is this the calm before the storm? My sense is that patience is running out. I think we're hanging on to it by literally, a straw, so to speak. I think if the Nifty was to fall another 500,000 points, I don't know if that kind of holding power would be there. So it's a bit unnerving. I mean, we all know the reasons for why things are happening, but I think the fact that it's not converted to redemptions yet is probably the only silver lining I see at this point.
Exactly. And that's the question that we want to understand. Let's come to exactly what needs to be done by all the investors. So what should those first-time investors you just talked about, who are enjoying this rally for the 1.5, 2 years time, do now exactly?
So so the mindset always is that मेरा stock वापस ऊपर चला जाएगा, ठीक है, थोड़ा गिर गया, ऊपर चला जाएगा. But I think prudence demands that you should always cut your losses if the losses are becoming excessive. So hypothetically, Sakshi, if you buy a stock for 100 rupees and it drops to about 80 rupees, I buy that argument कि ठीक है, मेरा stock ऊपर चला जाएगा. But the minute it drops down to 60, 55, it's better to cut your losses and sort of move into something else, is my sense. And it's very tough to give advice to someone when they're going through a tough time, Sakshi, because what they do eventually is always going to be a function of what's in their mind, regardless of what financial investor, what anyone does for that matter. But if I was advising somebody who had no investments in the market, I would say that you can probably start buying now. I don't know how much lower this is going to go. But I think stocks, good quality, old generation stocks are down 50, 60, 70%. And I think it's a bit exacerbated. Yes, there is an inflation risk. Yes, there is a risk that interest rates are rising. But I don't think the damage is going to be that much. The stocks needed to be down 60, 70%. So I don't think we're in that zone where you need to be really panicky yet. I think you could average. Eventually, pre-pandemic, the Nifty was at 12.5. It went to 7.5, and it bounced back to 18.5. So it is a given that the Nifty is going to go to 20,000. Yeah. Whether it happens in 6 months, a year and a half is academic. But as I say, it is only those people who invest in time they will bear the fruits.
Amid the ongoing volatility in equity markets, brokerages have played it safe and placed their bets on the blue chip that is the big boy of all blue chips, and that's Reliance Industries. JP Morgan has upgraded its rating on RIL to overweight from neutral and raised the target to 3,170 rupees from 2,575 rupees per share, implying an upside of more than 22% over the next 12 months. Laden by several factors for upgrade, Reliance is witnessing a positive earnings revision cycle due to strong refining and gas environment. The brokerages also say that the non-energy business valuations should also hold up very well going forward. Reliance is likely to attract an average revenue per user and further ramp up of retail footprint as well. The shares remain under pressure in today's trade, however. Air travel is set to become costlier, with jet fuel prices touching an all-time high in India today. Oil marketing companies hiked ATF prices by more than 16% this morning, taking them to their highest levels yet. This on the back of a series of hikes since January. SpiceJet was the first to throw in the towel, saying it had no option but to do so. Other airlines are expected to follow suit.
2 days ago, Business Today TV highlighted how revenge travel has led to never-before-seen visa delays, crowding at airports and costly air tickets. Today, there is more bad news for travellers. Jet fuel or aviation turbine fuel, which makes up for more than half the cost of an airline, has been hiked by more than 20,000 rupees a kilolitre, taking prices to a record high of 1,41,000 rupees per 1,000 litres in Delhi. This is a monstrous 86% hike over what jet fuel cost on the 1st of January this year. In a statement released this morning, the SpiceJet chairman and managing director Ajay Singh said the increase in the prices of jet fuel is not sustainable and authorities need to reduce taxes on the fuel, which he claims are the highest in the world. He added that a sharp rise in jet fuel prices and the depreciation of the rupee against the dollar have left domestic airlines with little choice but to immediately raise fares. This hike could be as high as 10 to 15%. Interestingly, though travel has in a so-called revenge mode after COVID, the Civil Aviation Ministry is still working in the pandemic mode. Airfares are still bound by price bans, announced in May 2020 when COVID was at its peak and concerns were being raised about the health of airlines. These bans, while setting a floor price for tickets depending on flight time, also dictate the upper cap airlines can charge from passengers. These price bans do not obviously take into consideration the uncontrolled rise in jet fuel fired by the war in Ukraine. Meanwhile, for passengers, the almost certain hike in airfares is yet another hit to their finances. Bureau Report, Business Today Television.
A crucial meeting of the GST Council is scheduled to be held on June 28th and 29th in Srinagar. Finance Minister Nirmala Sitharaman, along with State Finance and Revenue Ministers, will meet for the 47th time since the advent of the unified indirect tax regime 5 years ago. Among other items, the Council is likely to discuss rationalizing the GST tax rates. Our correspondent Karishma Asadani joins us for more on this. Karishma, it's been 6 months since the last Council convened. What are some of the key proposals for the upcoming Council to consider?
Well, right, Abha, one of the key proposals has to be on the compensation cess. In fact, earlier the GST Council meeting was scheduled to be April, but due to FM's other commitments, it had to be pushed. But now that it's finally happening after 6 months, the key proposal and the key discussion is going to be on the compensation cess. In the meeting, compensation issue will likely be taken up as many non-BJP states are pressing for the extension of GST compensation mechanism beyond 5 years, which is ending in June 2022. In fact, certain states have also written a letter to Finance Minister asking for this extension. Besides this, what is expected is that the Council may take an important final decision on hiking GST on online gaming. In fact, the group of ministers on online gaming had made a decision last month and submitted a report which the Council will study. Besides this, Council could also do certain deliberations on GST on virtual digital assets. So these are three key agendas. Besides this, tomorrow, a group of ministers on rate rationalization is meeting. So in case that report is prepared well in time, which will discuss on rationalizing certain taxes on certain products and on slab measures, then that will also be included in the Council meeting, which is happening in Srinagar by the end of this month.
All right. Thanks for joining us then, Karishma, and taking us through all the latest developments there. Let's take a very quick break. We'll be right back with more.
sun, we depend on it for energy and light, but solar flares from the sun could be deadly. Are you confused and don't understand what this means? Don't you worry, we have it covered. A massive solar flare erupted from Earth's star as it got active in its new cycle. A sunspot exploded and produced flares which lasted for 8 hours. The event led to a shortwave radio blackout for 8 hours over Japan and Southeast Asia. Before we get into the technicalities of what caused this, let's learn about solar flares. A solar flare is an intense, localized eruption of electromagnetic radiation in the sun's atmosphere. Its occurrence will disrupt radio signals. The occurrence of solar flare also varies upon 11-year cycle. The solar flare unleashed superheated plasma from the sun, powering them at speeds ranging in millions of kilometers per hour. The growing sunspot AR3032 exploded, producing M3 class flares that lasted nearly 8 hours. It hurled towards the inner planets, including Earth, ionized the top of the atmosphere with the extreme ultraviolet radiation released from the sun. Geomagnetic storms are a major disturbance of Earth's magnetosphere that occurs when there is a very efficient exchange of energy from the solar wind into the space environment surrounding Earth.
Welcome back. Income tax return filing season has kicked off with the government notifying ITRs for this year. While the information in the database of the Income Tax Department has increased drastically, so have the reporting requirements in the new ITR forms. Also, artificial intelligence is playing a vital role in tax administration. Taxpayers need to be all the more careful and cautious while filing their income tax returns. We have with us today former president of the Institute of Chartered Accountants of India, Ved Jain, who will take us through all of the major changes in the IT return forms. But first, let's make it clear that the classification of the IT return form stays the same this assessment year. Form 1 is still the Sahaj form for those with total income from salaries, one house property and other sources up to 50 lakh rupees. Form 2 is for individuals and HUFs without an income from business or profession. And Form 3 is for individuals and HUFs with an income from business or profession. Form 4, the Shugam return, is still for individuals, HUFs and non-LLP firms with income of up to 50 lakh rupees from business or profession. Let's also take a look at some of the big changes in the ITR forms. As we said earlier, there's no change in the applicability of the form. There is, however, added burden on you by way of additional disclosures in capital gains. Those filing tax returns will also have to disclose the taxable portion of EPF as announced in the budget in February 2021. And if you hold or have held foreign assets, there are some special segments for you there as well. Let's go across to Ved Jain to understand better some of these new implications. Ved, take us through what you see as the primary takeaways of the assessment form this year.
Abha, there are many changes which have been effected in this form. As you rightly said in the beginning, there is no change in the 7 forms which have been specified for different category of persons. But the details which are required to be given in these forms have been modified. There are 2 reasons why these details have been modified. In technology use, where the department want to use the artificial intelligence, and in order to capture that artificial intelligence, now they want every taxpayer to provide more detail. Second, many changes are consequent to the amendment made in the Income Tax Act over the last 2 years. As we see, the more and more technology is being used, more and more data and inference statistics is being collected by the tax department to have a complete profile of the taxpayer. If I look at the many changes, one is normally regarding the capital gain. So normal, the taxpayer was required to compute the capital gain, giving the year of purchase and sale. And now it has to be very specific, the date of purchase, date of sale, date of improvement if you have made what is the cost of improvement, etc. So more details are required. Another is regarding the EPF interest. As you were just telling it, now the Act was amended to provide that in case interest on your annual contribution to your provident fund exceeding amount 2,50,000 rupees is chargeable to tax. So in case you have contributed to the EPF more than 2,50,000 rupees, the interest portion on thereof need to be included and provided therein. So there are few changes which have been made in addition there to many other changes which have been made on the respect of thereof. As I said, more and more technology is being used. So it is cutting both ways. Some information is required to help out the taxpayer, and some information is required to get a profile of the taxpayer and to make sure that the deduction which is being claimed and the exemption which is being claimed is proper and in accordance with the Act. And one of the change maybe for the salaried people, maybe ESOP for the startup. Now, ESOP of the startup can be taxed in the next 48 months. So in order to capture that the tax is not evaded, now information need to be provided whether you have invoked that option, and in case yes, the detail is required to be provided on that. Further, even for pensioner now, earlier it was sufficient to say that I am a pensioner. Now it will be required whether you are a pensioner, whether you have been a central government employee or a state government employee or a public sector employee or any other category which is there. So more and more information is being collected. One way, as I said, it makes their life a little bit more complex and more tough for a taxpayer, because now he need to fill in and answer so many questions, which many of them are technical and may not be easily, I think, clarified by to the person who is filing the return, and may need the help of a professional to fill in the returns.
All right, fair enough. Mr. Jain, thank you so much for sharing all that insight with us on the income tax advance filing process this year. The 90 basis point increase in interest rates by the Reserve Bank of India couldn't have come at a worse time for the Indian auto industry, which is slowly emerging from the ravages of COVID. How has the rate hike affected car sales? What about the long waiting periods? Business Today TV's Chetan Bhutani spoke to Hyundai's Tarun Garg to get some answers.
So tell us about the venue, sir. Nearly after 3 years, contribution about 22% to the portfolio as far as the sales are concerned. What made you launch this vehicle at this point of time?
So thank you Chetan for having me here. I think Venue has been a very, very strong game changer for Hyundai. 2019, when we introduced the Venue, basically compact SUV segment was very basic. I think the contribution keeps on going up, and Venue was able to introduce some new benchmarks in the industry, whether it was with Blue Link connectivity or the turbo engine. I think we got some great response, and even after 3 years, there's a strong back order for the Venue, and in fact, we are so happy that the time for upgrade has come, and still there's a waiting for the car. So in this car, of course, we have brought in some 40 plus changes, whether it is the exteriors, you have seen those bold exteriors, the interiors, the rear of the car, the connectivity features, 60 plus connectivity features. We have made some very, very customer convenience features like, the drive seat, which is power, or in the rear, the seat has, there's a reclining option, and of course, home to car with Alexa and Google. And of course, we have embedded some command in the car, which would make the response time very, very fast. So if you say switch on the AC, it will be very, very fast to respond.
Right. Mr. Garg, very crucial question is that you've got excessive bookings for the vehicles. Creta is also in huge demand. Do you think that the Venue, the compact SUV segment, would create kind of a clash between the Creta and the Venue, because they both almost cater to the same amount? Creta is, of course, being a little more plush and a little more high-end. But do you think is there kind of any conflict that would exist?
Frankly speaking, I think the SUV segment is exploding. In fact, in 22, if you see, the contribution of SUV segment is now 41% to the industry, as against 34.7 for the hatch. So very clearly, SUV segment has overtaken the hatch. So the segment only keeps on expanding. As regards the Creta segment and the Venue segment, I think the customer is very clearly very, very different. There are much more first-timers in the Venue segment. In fact, 36% of the Venue sales is to first-time buyers. Okay. And many of the customers who used to buy hatch earlier are now shifting to the compact SUV. Creta, of course, has a huge back order, and it has been a very strong product for Hyundai and, of course, for the industry as well. We are very proud of our leadership, which we achieved in the SUV segment, both in 2020 and 2021. And I think things will only go better from here.
All right, that's where we leave it on the show tonight. Thanks so much for watching.
India's unemployment crisis has been the talk of the decade. Taking this into account, PM Modi has pushed to recruit 10 lakh people in mission mode within the next year and a half. But given how deep the crisis run, will it be enough? Frustrated job seekers, criticism by opposition parties, and lacks of unfilled positions in central ministries. All of these factors led Prime Minister Modi to tweet about the recruitment of 10 lakh people. Earlier this year, students and cops clashed in Bihar and Uttar Pradesh because of alleged irregularities in railway recruitment. Moreover, COVID added to the crisis. India's joblessness peaked at 23.5% in April 2020, and India fared worse than even Bangladesh, Mexico, and Vietnam. Only 40% of Indians were employed or looking for work compared to the global average of about 60%. Added to that, India has 130 lakh active job seekers with only about 2 lakh vacancies. This is forcing youth to look for menial jobs or move abroad. The job situation is such that educated people like business graduates, law graduates, and engineers are forced to apply for low-skilled and low-paying jobs or stay jobless. Till March 2020, there were 8.72 lakh vacant positions in the central government ministries and departments, 2.5 lakh in the civil.
Oh, sorry.